what I guess what I'd like to talk about is like, how you use the standard deviations as part of, um, the other strategies that you've showed as far as like swing formations, and specifically time, because I've noticed like I feel like I'm seeing a lot of people take entries at different times, and I've always been of the mind that like 9:30 to 10:30 is a great window. But
Mhm.
it seems like you can kind of use it for other reversals or other plays later in the session. So I'd love to know like what your thoughts behind that are.
Yeah, so I mean, the way I made my course is it's not crazy long, but it seems as though everything is its own strategy, and it's really not. Everything is just one thing. So for me, market structure, swings and fair value as my high time frame, and everything else is just to me it's extra. To me, it's more like just icing. Like the standard deviation, the reason you're seeing like more people post things at different times now is it does allow that factor of just you're basically able to ping pong the markets, um, however which way you want. But for me, the core of everything is it's gonna be that same flow chart that I created for you guys and sent out. 15-minute market structure first, or
Yeah.
hourly PD rate, fair value gap or swing first. Next, 15-minute structure. And then I've noticed that, the standard deviation, it'll just be a really nice icing on top just for entries. And in terms of time, time becomes time's really important to me, but I'm seeing other people kind of trade at different times and it's working for them. And I know it's working because I mean, as long as you're somewhat in line with structure and the standard deviation levels make sense to what you're seeing, um, on your 15-minute or your hourly, it'll work. Like for example, I think I had said I'll just go over it and explain as I'm basically going over the concepts. So overall, I don't know if you have my flow chart in the Discord. I saved it to, or I pinned it to the gym section.
Yeah.
Um,
Yeah. Have it.
if you read my flow chart, the first thing that I like to do is start on an hourly and just mark out, a fair value gap and swings nearby that price can take. So we got a swing high here. Um, we got a swing low here. We got a bullish, well, two bullish fair value gaps here. And, we have a fair value gap here. We have a swing low here. So I usually mark these up before, I want to say 9:30. I don't like to really cut it close. I like to have everything pre-marked. And then next thing you know, I'll go into the 15-minute, mark up 15-minute structure. I'll usually just start from 2 a.m. That's my base point. I cannot just draw all the structure. You kind of understand that already, right?
Yeah, totally.
Yeah. So 2 a.m. here, swing low, swing high, lower low. Now, what did we expect here? Obviously, we expected a higher high. We didn't get that. So, with that being said, this is your new lower low. This is your new lower high. And now, this trade that I took up here briefly seems like nothing, but when I go on the lower time frames, you'll kind of see a few things about the standard deviation and everything like that. So we got a range high and range low. Keep in mind, paying attention to these ranges and the OTE levels are very important. So we have a 0.62 level here. And if you look to your left, what else do we have next to that OTE level?
15-minute fair value gap.
Yeah, the
Yeah.
15-minute bearish fair value gap. So we draw that. And how do we know a bearish fair value gap is respected or not?
You get a swing formation.
Yep, swing high formation, right?
Yeah.
All right. So swing high formation inside the bearish fair value gap, we tapped our OTE level. Um, we're going down. Like if you wanted buys, we're not getting buys here inside this bullish fair value gap here. So then how did I incorporate standard deviations into such a seemingly meaningless buy? Um, let's take a look. So for me, the way I use standard deviation is based on time. What will the next hour do? What do I anticipate to occur or at least the next hour so I can really take advantage of that trade as it begins. So for example, this hour closed like a little doji. I traded this to the upside. Let me show you a little bit here. So I'll usually start off from 8 a.m. 8 a.m. I'll draw vertical line. 9, I'll draw a vertical line. 10, I'll draw a vertical line. 11, I will draw a vertical line. 12. And if I want to trade further, I'll keep going with it. Just for the sake of example, I'll keep going further. But usually I won't really be trading this late here. All right. So when I start off, first thing I'm really trying to figure out is by 9:30, do I have a certain direction that price will go? Are we creating a market structure shift to the upside or the downside? And if we create a market structure shift to the upside, I can measure how far we're going to go. So this trade here, that little buy that I posted right here, was due to what was going on in my left. So we were going on a downtrend from around 8 to 9. If I measure that from swing high to swing low, from swing high to swing low, we tap into this -2 to -2.5, which also align with a 1 hour bullish fair value gap. That's a good thing to see. And then the next thing I'm looking at is, are we potentially forming a CISD to the upside? And are we respecting bearish candles, right? Are we respecting bearish candles? So people that entered at 9:13, they're thinking, oh, well, if we're bullish, bearish candles will be respected. The thing is, you have to wait at key times. I always say this, but usually any time before 9:30 gets what? Manipulated, right?
Yep.
So really you need to wait for key times. 9:30 is that key volatility injection. So when I'm starting to see this right here, this potential formation, I can see this live that we're respecting this bearish candle here. And I can see that we're about to form a CISD. I can also see that even if we're to be bearish, I can at least take profits. I can at least take profits at this OTE region of 0.62 that also lines up with a bearish or bad gap. So either way, I'm fine with that. Now, measuring wise, you would technically go from this swing low to this swing high because that's what formed the market structure shift, right?
Right.
But obviously, we don't keep going up, do we?
No.
Right? We tap that 15-minute bearish fair value gap, market structure shift to the downside, CISD. Obviously, we're not going to keep going up, right?
Right.
And then when you're looking at that 50-minute time frame, geez, why does this thing keep going back? When you're looking at that 50-minute time frame, this close is not particularly favorable for bulls. This is not something you want to see if you are bullish. So that's one. Um, Two is you're noticing on the 50-minute time frame that can I freaking see what the heck? Where's my tools? All right. You're noticing that this bearish or this bullish up close candle is being respected. That's a bearish signature. When bullish
Mm.
candles resist, like they push down price, that's a bearish signature. But let's say you're not convinced yet. This close will convince you. All right. This swing high formation inside of bullish or bearish fair value gap will convince you. Next, let's say you're still not convinced. This is really the power of standard deviations here. So now the 9 a.m. candle is ending, 10 a.m. starts, but, but we have the structure shift to the downside here. So from this swing high to this swing low, this is your target. Conventionally, your -2, -2.5 lined up with a swing low to the left that I kind of erased, but it lined up with a swing low to your left. And if I go on my hourly, let me mark it up. So last here. I'm going to mark the swing low here, and you're going to see how it lines up almost like it, you know, it was designed for that. So it actually lines up perfectly, not with a -2, but perfectly with a -3, -3.5. This is a very, very good signature, and that's the way I like to teach standard deviations is to always make sure it lines up with what you're looking at as a target on the hourly time frame. It will line up, it should line up, and if it doesn't line up, there's
Mm.
something wrong. You did it wrong. So again, standard
Interesting.
deviations is, let's say we're going up, we form a market structure to the downside, I'll anchor from the high to the low. If we're going down, we do a market structure shift to the upside, I'll anchor from the swing low to the swing high. Does that make sense?
Yeah.
Oh, it's still structured. Like
And that works with all time frames or
that works with all time frames, but I focus primarily on the hourly time frame or the hourly power of three because that's the one I see extreme consistency in. Because the higher time frames you go, they're gonna align with different power threes that you'll probably not use intraday. And that's why I'm only going over this one because there's so many that you're just gonna have too much on your chart. Does that make sense?
yeah,
Like
totally.
show you how to do this on like stocks and like long-term ports. Like there's ways to do that, but for intraday trading and for our purpose of just getting in and getting out, 1 hour power of three mixed in with standard deviation, obviously mixed in with what we already do, structure is all you really need. So at the start of 10 a.m., you see this large down close candle, and you already see this anchor point here. We're already at this point here in the hourly bullish fair value gap. Now, remember when I don't know if you saw this when I said in the chat that if bearish, bullish candles should resist against price, like they should
Mhm.
act as resistance. You remember that?
Yeah.
And this is really why I was
Yes.
marking it. I marked this because I wanted to see can price displace past this bullish candle. If we're going to be bullish, we have to be bullish right here. No, still resisted against price. This bullish candle right here, still resisting price. This bullish candle right here, still resisting price. This one still, and I was just marking all potential entries somebody could have had. Obviously, somebody that marked this would have technically been wrong. What you want to look for when marking bullish candles or bearish candles, if you're bullish, is you just want to see the V. You want to see basically a high created and price going back down, because that's genuinely how how price will move based on line chart logic. This is not really significant like high. It's just literally a candle opening up. So when you look at price like this, and this is even on a 1 minute time frame, you'll have pretty much accurate whereabouts where to place your stop. Like if you're looking right here in terms of entries, like you wanted to learn about entries, right?
Mhm.
Or bearish, every bullish candle, I can take the high of that candle. If you want to be spicy, you can take the zero point 0.5, but I prefer if the candle's small enough, I will take the high of that bullish candle, target swing or whatever, make it just bearish fair value gap if you kept on holding based on 50-minute structure. Um, Other high bullish candle should act as resistance. Again, placing stop loss either at the high or 50% of it, one per. Again, another bullish candle, high, again, same targets. Um, and so on and so forth. Basically, all of them should be respected. Like, I'm not kidding with this. Like, if you're bearish, all up close bullish candles should be respected. Now, of course, sometimes when you want to play around with your stop and you say, "Oh, I'll do less than half. I'll do like this." Yeah, you might be stopped out. Um, and that's a learning experience for everybody. But like this looks so symmetrical, right? But genuinely speaking, like this is these are all potential entries. Um, and that's how I've kind of, simplified it when it comes to entries on the lower time frame. I know I've always been doing 50-minute time frame, technically speaking, 50-minute time frame entries. Technically, when we tap this bearish fair value gap and that swing high was formed, that third candle, and Maniela from the group posted this, that third candle would be your entry high. I would prefer highs to be at the swing high, or again, 50% of that high,
Mhm.
and you know, target the lows or the bullish fair value gap. But again, I'm just showing you different ways to enter. I technically, in my opinion, I prefer entering with the 1 minute, um, just because it gives me a little bit more information. Like technically, this swing high formation is just this market structure shift to the downside on the 1 minute, but the 50 minutes saves you the time of just looking at that. The reason I kind of prefer it, especially with what I'm showing you, is I like to see how price is respecting these up close or down close candles. It really allows me to gauge order flow. And on the 50-minute, all it looks like is just, well, it just looks like continuous down close candles. It would be improper of me to tell you to just enter at every single one of these candle lows. Does that make sense? It basically
Totally. Yeah.
no option of re-entries if you miss your entry. Does that make sense? If you miss
Yeah.
this, you basically are shit out of luck on the 50-minute time frame. Does that make sense?
Yeah.
So
Yeah. Totally. I missed the morning. This.
yeah,
Yeah.
me providing this, other way to look at the market, which still flows with our system. This allows you, okay, if I miss this, price is going in this trend, I can enter like this and be safe without the feeling of like, missing out on something. So Geez, why the heck does it keep doing this? Maybe I gotta make it go back so it happens.
Yeah, because I feel like doing other higher time frame entries, it feels like chasing
Yeah,
almost.
yeah. Once the move starts, you is basically nothing you can really do here. Like I at least want to give you reasons as to why you can continue to re-entry. I don't just want to tell you enter at a candle low. That's not going to work for you. Um, but what I wanted to show you was overall the logic. So people that took buys here, the reason I was praising them for taking buys here, not here, but here, was when you look at this high and low range, and this is when things start to get a little interesting. You again measure it from high to low. So this is a point 0.5, this is a 0.62. NQ hit the 0.62, but you see this bearish fair value gap in here?
Mm.
It lines up perfectly fine. And I'll just mark this whole thing up, this upper half. The reason I was saying that it was a really good buy is this fair value gap here on the lower end, it didn't do its job. Like it's technically supposed to just take out that external low. So when you see price do that, and then you can kind of see it on this, but we formed a swing low on the hourly. I don't know if you can see it there. We formed a swing low on
Oh
the
yeah.
hourly.
Yep.
That's two. Now we formed a bullish fair value gap on the hourly. And technically speaking, for us to go down, this candle can open up perfectly fine, but the next candle has to create a swing high. That didn't happen. Where did it tap into? That upper quadrant of the 50-minute time frame. So when I saw people taking buys, I'm just like, that's a really good buy because you're just buying to a retracement. It's similar to this trade right here, but you know where price is going to retrace. And that's why I'm happy with it because again, I don't care what entry you take. It's just, does it make sense logically, right? So this made sense. And then when I had said price is going to take out the external low because we've reached this, price forms a swing high here, and that could have been your entry on the 50-minute time frame. But then when we go into the standard deviations aspect of things, it gets very, very interesting because it somehow again lines up with everything. Um, so we do a market structure shift here to the upside. Can you see it right
Sorry,
here?
where?
A market structure shift to the upside around here, like here.
Yes.
So I can measure that, and I see that the levels line up with this bearish fair value gap here. So maybe you bought from here, and you could have had a sloppier entry. I don't mind that. Um, from here, maybe you got stopped out. You have 50% of the, I don't care. It needs to take out this low. It needs to take out this low. So the fact that it did take out this low, you're still saying, okay, cool. Let me wait here. This is 11 to 12. Let me wait for, let's just say 11:30, 11:45. Let me see what price does. Are we going to keep going lower, take out this low? Or are we going to form another market structure shift to the upside? And I can anchor that. Really what I like to do here. We form another market structure shift to the upside, and it also lines up with this bearish fair value gap. I can technically take this long here right after the bearish candle, stops at the low. This bearish candle should act as support. And technically, they are. This was technically more of like a, if I want to be analytical with it, from this high to this high, this is more like a just OTE retracement. Um, we target that bearish fair value gap for basically a 1 to 7. And on the 15 minute, all it looks like is all that is just this little retracement move here. And then notice that we tap that 15-minute fair value gap. And now what do you see? A market structure shift to the downside. Now you anchor from this high to this low. Again, when we are bearish, what will bullish candles act as?
Resistance.
Resistance. So we can start to mark all the bullish candles and we'll just look at potential entries. Um, and we'll start to see something here. Oh, this one got, well, if you had your stops at the high, you'd be fine. Um, this one's a very big, probably sloppy one. That got stopped out. So this one got stopped out. I want to say this one got stopped out. This one's perfectly fine. We did close below candle, so we can count this one. This one's fine. This one's fine. This one's not so fine. This is fine. And then when I start to take a look here on the 15-minute time frame, I start to look at what's the framework here for all of this shit. Because the 1 minute, we're getting a little, a little rigidity here. What's the framework for getting stopped out here? I look at the 15-minute and I say, oh shit, we have a 15-minute fair value gap here. So what you can do when you start to see a retracement up and it's taking you out on the 1 minute, unless if you enter, again, I prefer to enter at the lower high, the move just because of that. You're gonna look for that same model here, 1, 2, 3 swing high formation. And I bet if you go on the 1 minute time frame, price will smoothen itself out again. That's exactly where price smooths itself out. So realistically speaking, if you're having trouble with the 1 minute standard deviation, that's why I'm not like promoting it that much, because sometimes price can be a little freaking choppy. Just look at the 15-minute. How are your entries? Where are your entries being placed at? So this entry was placed at 1, 2, 3, a swing low. That's not by mistake. Another entry was presented, bullish fair value gap, 1, 2, 3, another swing low. This entry to the downside was presented to the downside after tapping a bearish fair value gap, 1, 2, 3, another swing low. This entry was presented again, 1, 2, 3, another swing high. So realistically speaking, if I get one stop out, just one, that's all it takes on my 1 minute time frame utilizing standard deviations, I immediately just go to the 15-minute. I'm like, what are we doing? What's the objective here? Where are we going to? And you'll immediately get a lot of clarity. Like, I'm sure people here on a 1 minute time frame thought we were buying, but again, 15-minute clarity, 1, 2, 3. You obviously, that's a swing high formation. We take the second candle low, so a swing low cannot possibly form here. Like, in terms of entry, I want there to be some fluidity and some kind of like jurisdiction on like, okay, today is gonna be most likely a smoother day. I can, enter on the 1 minute time frame. If structure is aligned, I can enter on the 1 minute time frame. If I'm taking counter trend trades, for example, these buys right here, because they're just a buy to retracement, I'm gonna have to at least put a wider stop, because when you're counter trend trading, usually price will do like large wick downs like this. When you're with the trend, usually you'll start to see a little bit more forgiveness. It's when you're in the afternoon, price will wick you out a little bit more. When you're in the AM session, it will be a lot more fluid. Like certain things like that, when it comes to entries, I prefer the user or you as my student to kind of just be like, oh shit, like I need to do this when I'm entering at this time and this when I'm entering at that time. I don't want to have to tell you like, hey, AM session is going to be the most volatility, the most volume. your entries will be a lot cleaner. But if you're entering after, let's just say 11, like right here, it's gonna be slower, it's gonna be choppier. You might have a good entry, but you're gonna have a lot more manipulation, a lot more wick downs. It's just the name of the game. Um, Around 2 p.m. in the next 4 hour candle, we get a lot of volatility because the day's closing. It's gonna get a lot smoother, and it does. So it's like you could take this whole entire video because I'm recording it and listen to it and take notes. But what I'm trying to say is the stuff that I put in the course, like the 50-minute swing high formation, the 1 hour swing lower, swing high formation, use that. But also, when you're if you don't catch that 15-minute trade, you can always go down to the 1 minute as long as you know where your draw is and just utilize these concepts of just, okay, I missed that 50-minute entry. Maybe it was right here. Well, technically, you did it because this is your 50-minute low, and this is what I prefer you to do. This is what I prefer you to do. If you don't like to just enter off of 15-minute swing higher, swing low confirmations, I prefer you to just mark out your 15-minute level, wait for price to take it out, and then jump on the 1 minute and flow with that trend that you have. So if we're bearish, utilize those up close candles and just mark them out. If we're bullish, utilize those up close candles that we have and mark them out. Let me see if I have just another example here. Um,
Yeah, that's one thing that I've noticed that your other entry video really helped with is like I like to enter on like a 15-minute market structure shift or whatever, but sometimes you'll get caught in some like pretty big retracements.
for example, this day, I'm pretty sure I caught this entry right around here when I started noticing all these bearish up close candles are being respected, and overall 50-minute structure was bullish. So this was a very, very simple entry, very, very quick entry. Um, Not too much effort here, but I mean, entries at the end of the day, I need you to just be in the move. I've shown various ways to enter. I mean, the biggest thing when it comes to entry is just making sure you have proper stop placement. I've already made a video on that. I've shown you proper stop placement, what it should be on the 1 minute time frame if you enter. Obviously, what I prefer you to do is if you're gonna enter early in the move, please, because if you if you enter somewhere here, your trade can still be valid because, well, if I'm really looking at it from a higher time frame perspective, 15-minute, we still have imbalances here. So technically, price could go all the way up here and your trade could still be valid, correct?
Yeah.
So I prefer if you're gonna enter right after, like when price taps your objective and forms that market structure shift for CST on the 1 minute, enter right after. I'm not gonna like sugarcoat it. When you're in, the latter stages of a sell model or buy model, price can get a little ugly sometimes. And hey, you can re-enter, of course, but at the same time, save you some hassle by just once you get a confirmation. The worst thing that can happen when you enter around here, literally the worst thing that can happen is some Trump news comes out and takes you out. But if there's no Trump news coming out, you should be fine. Like structure will keep you alive here. And then last thing I want to say is don't play with your stop. Don't play with your stop. When I say you want to keep your stop like either at 50% of a high or 50% of a low or 50% of a bullish candle or 50% of a bearish candle, it needs to be that because if you want to put your stop like this, make it real nice and tight, get a 1 to 48, you will get stopped out unholy amounts of times. And I don't want that for you. So Just make sure your stout's at a good point, man. But I'm gonna send this recording to you, man, and I hope you have a good night with your wife and your baby. I hope everything goes well with just adapting to the new schedule and just God bless, man. I'm happy for you, really.
I appreciate it, bro. I really do.
Yeah, yeah, hopefully was this useful? Just
Yeah, no, this is great. This I think like helped put some missing pieces together
and if
for
anything,
me at least.
send me a picture of your chart when you're